It's about that time of day again, folks. 7:45 a.m. this morning. Usually we get started about 7:30, a little bit late start this morning. Monday through Friday, 7:30 a.m. Eastern Time. We go from the screen here in Los Angeles all the way to the trading floor in New York City. Welcome to our crude oil morning prep, a very unique way to begin your trading day every morning. My name is Joseph James. I'm a day trader with SchoolOfTrade.com. Check me out online. That's SchoolOfTrade.com, and you can join our free trial. It's right on the homepage of our website. We run a live trade room every morning at 8 a.m. Eastern Time. Come out and see me. I've also got with me here today my partner in crime, my much better looking half, Mr. Marty Errico from Traders Audio. Marty and his partner Jeffrey, they do a great job every morning at 8:50 a.m. Eastern Time, Monday through Friday. Check them out at tradersaudio.com. They also offer a trial, so check them out. Listening to them Monday through Friday at 8:50 a.m. Eastern Time. All right, here's the plan today. I'm a technical analyst, which means I'm going to start with charts. I'm going to work my way down from a slower time frame down to a faster time frame, analyzing what's happened over the past few weeks, over the past few days, over the past few hours, and we're going to do that to anticipate direction at the open, right? That's the goal here. I want to anticipate direction at the open this morning. If I can anticipate direction, then I can find those high percentage trading opportunities, which will get started this morning as early as 8 a.m. Eastern Time. So it's relatively simple. Start with a slower time frame first, move my way down to the faster time frames, try to figure out what's happening here for direction at the open. Once I know direction, I can find those high percentage opportunities starting as early as 8 a.m. Eastern Time. Once I'm done with you, I'm going to toss you all the way across the country from Los Angeles over to the NYMEX Exchange in New York City, where I've got my good friend, partner in crime, and graduate of School of Trade. His name is Marty Errico. He'll be providing us with our pit analysis this morning, looking at market direction, intermarket divergence, market internals, option prices, and those always important and sometimes a little bit confusing, those pit session trading levels. So make sure this morning you listen in when Marty talks about the intermarket divergence between crude, RBOB, right, of course, heating oil, and Brent crude, and then make sure you write down those pit session trading levels because they're always very, very important. Alrighty, you've heard enough out of me. Let's grab some charts. Let's see what we got working on today. Now, today is going to take a little bit of a different flavor. You got to put yourself in the context of what day of the week, what week of the month, what month of the year we're talking about here today. I'm coming back from a break right now, so I'm a little bit behind schedule on my end as far as updating my blog. Not to worry though, that will be back to normal here later on today. We look at today's news events, though, and we begin to speculate, again, day of the week of the month, month of the year. Let's think about some of the different aspects that are affecting us as traders today. Well, first of all, we'd be foolish not to mention the long weekend, right, the end of summer. And this is something that I think is going to be a very important part of today's price action because, as you can imagine, just like me, a lot of traders are coming back to their desks, possibly a little bit groggy from an overnight flight or from unpacking the camping stuff right from the weekend. You get the point. This was the summertime weekend. This was the weekend of the summertime, right? Labor Day weekend. At least here in the U.S. it was. And so we know that traders will probably be suffering a little bit from that, summertime hangover, right? From whatever reason it may be. Another thing we have to worry about today is that this is a Tuesday that feels like a Monday. So a long weekend now reminds us, wait a second, Monday was a holiday. So with Monday being a holiday, things are going to be pushed back a little bit. You'll notice we don't get inventories until Thursday this week, right? You'll notice we have the ADP employment report on Thursday this week, right? So we got a couple things that would normally be on a Wednesday or a Tuesday that have been pushed back to Thursday. Okay, so Monday was a holiday. Keep that in mind. It's going to have a couple people, a few traders are going to be caught off guard because of that, right? You don't be caught off guard though. Let's see here. What else we got? What else is concerning here for us? I think, and this is just me personally, but I think that Friday's non-farm payroll number is going to be a major spectacle this week. I think Friday's non-farm payroll, right, that would be the employment situation on Friday, right, 8:30 a.m. Eastern Time. The reason why I say that is because we've been talking about Fed tapering, Fed speak, and everybody seems to have their eyes and ears focused on that non-farm payroll number at 8:30. Remember, the real jobs number is non-farm payroll. Jobless claims, right, which we'll see on Thursday. Jobless claims have been spiking a little bit the past 3 weeks. Jobless claims, that's just a report of who is filing for their unemployment benefits. Okay, there are lots of folks that either leave that market, or, that stop their hunt, that aren't qualified for for jobless benefits, right? After a certain period of time, you lose that ability to get them. So there are some people out there that really strongly believe that this Friday's non-farm payroll report, myself included, I believe that everybody is going to be focused on that number this week because we're going into the fall now, and we're going to be talking about the end of the year and what are the jobs looking like, and if the jobs are looking great, if we're adding more jobs, well, there's a higher chance of Fed tapering. Fed tapering meaning they're going to be removing the stimulus in the economy. All of this is going to have a big impact this week, and I'm wondering this morning as we go into our first few opportunities of the week, I'm wondering if that Friday's news is going to continue to be interrupting our week here. I have a funny feeling that we're going to see a large majority of traders that will be a little bit distracted by that report later this week and may choose to trade a little bit more carefully before we hear from the employment situation on Friday. So a shortened week coming out of a long weekend with Friday's major news, all right, Friday morning. Those are some of the clues that we're getting this morning, at least things that I'm looking at here today as I look over my news. We talk about what day of the week, what week of the month, what month of the year. Well, what day of the week? Today's a Tuesday. What week of the month? First week of the month, baby. First week of the month. Always an exciting week. And what month? The month of September. Now, we know the month of September always going to be a transitional month. Okay, the month of September, early in the month, as in today and tomorrow, will be a transitional month. Again, traders getting out of the summertime routine and now into the fall. Many traders around the world know that when September hits, now it's time to kick off the flip-flops, put back on the closed-toed shoes, and go to work. So we're going to see that transition come in this week. The first week of the month is always exciting because you get those jet fuel buyers, those consuming hedgers that will come in. Airlines, shipping companies, major corporations, large trading firms will enter the market now with hedging purposes, hedging against unexpected price movements, right, whether up or down. So we'll be expecting of hedgers entering the market first week of the month. I'll let Marty talk about who he expects to be in the pit this week, right, buying up those crude oil contracts as they hedge for the month ahead. The day of Tuesday, what do we know about a Tuesday? Well, typically a Tuesday is, it's not really that impressive. You know, Monday's the beginning of the week, Friday's the end of the week, Wednesday's inventory day, Thursday's jobs claims day. Tuesday's not normally going to be a big streaker, if you will, on the weekly calendar. Today, though, we do have quite a bit to talk about here on a Tuesday morning, so let's take a look. First things first, we've got PMI manufacturing at 9 o'clock, ISM manufacturing at 10 o'clock, along with construction spending at 10 a.m. Eastern Time today. So here we are, September 3rd. We have, first of all, a Red Star News event at 10 a.m. this morning. Red Star News is always very important because, as you've probably heard me say before, Red Star News, the most important news we get of the week, it's always going to be a time where we see more volatility, more volume, and more people participating during that, in this case, ISM manufacturing index. Now, if you read into the news reports, last month, we saw over 55 for the reading on that ISM manufacturing. Now, remember, if you're following along at home, anything over 50 indicates an expansion. So the manufacturing sector here in the United States is growing as of the month of July. Will it continue to be growing in the month of August? We'll hear from at 10 o'clock this morning, that ISM manufacturing. Again, think about this in the form of how it will be reacted to Fed tapering. Everyone's worried about it. Well, people aren't worried, but if the economy is expanding, if we are seeing a growth in our economy from all the different aspects, we will expect to see Fed tapering kick into high gear right before the end of the year, and that's going to mean big changes for a lot of the markets we're trading. Okay, so keep an eye on that. Now, the most important factor this morning is going to be reminding ourselves, don't trade directly into this news, and be aware that at 10 o'clock we're going to get the best opportunities today. So again, be careful as we begin this morning with the news starting after a long weekend. Remember, with the non-farm payroll news on Friday, we're a little bit curious to see how the personality is going to be ahead of that news. 9 o'clock news just before the opening bell on crude. 10 o'clock, we get the Red Star news, construction spending, and then we get this minor report at 11 o'clock this morning. We'll be curious to see what the Gallup consumer spending looks like, but it's not going to be a major report. My meat and potatoes here today tell me that from 9 o'clock until 10:30, from 9 until 10:30 a.m., that's when we should get our meat and potatoes today from our news this morning. Set your alarm. Be ready for Red Star news at 10 a.m. this morning. And, of course, that takes care of the news that we have to work with. Looking over some charts here this morning, today was a very unique scenario because we almost have to go back to the drawing board now that we're in the month of September. Remember, there's a lot to be said about the changes in personality between the month of August and September. So this morning in our live trade room, we'll be going over all this with our members, going back over all the charts, making sure we're ready for rollover middle of the month, and making sure that we know that now is when the price action should be returning, right, to its previous glory, right, that we saw before the months of July and August. The month of August was a very, very slow month this summer, and we are excited to see that volume return here this morning. And this morning, we'll be spending most of our time today going back over the charts, preparing for the week ahead of us, and, of course, preparing to make some serious profit here come the fall. What do you see here on my 30-minute chart? The first thing I notice is look at how narrow that range is coming in overnight. You can see a very narrow range the past 3 trading sessions. You've got Sunday, Monday, Tuesday. Now, there was no trading here in the U.S. on Monday because of the Labor Day holiday, but you can see there was a little bit of activity there electronically trading. You can see, though, very narrow ranges right now with an overall what appears to be a slightly bullish tone to it. We're right on top of the previous high of day. And remember, once we get above that previous high of day, I'm buying pullbacks now up to that the next previous high of day, 108.75. So if we keep making new higher highs here, I will be buying with my wave pattern. Targets above me, 108.75 and 110.07. That's 110.07, and then you've got 108. You've got your 108.75. Those will both be targets for me on the upside here if we find those wave patterns to get the long side. Very, very concerning, though, here, sitting right on top of the previous high of day. That's one very big flag. Red flags always occur whenever we see price sitting on top of any price level, the previous high of day, the previous low of day. These are all the same. I'm very, very concerned if price goes to the previous low of day and sits right there. That tells me that there's lack of confidence, there's lack of direction, and, of course, right now you can see we are trading right on top of that previous high of day. So immediately I think bullish, but at the end of the day, I think the most important clue we get out of this is we need to wait here a little bit more. It's trading right on top of yesterday's highs. My big concern will be fading back into the range. I will sell that short, new higher highs. I'm going to buy pullbacks on that up to the, again, 108.75 or short down to the 105.88. But I got to get away from this previous high of day first. Another clue here we're seeing this morning off of my anchor chart. Open up some anchor charts here today. This will be the slowest time frame I'm using in my trade room. This time frame, of course, will show me the big picture. It will show me the last few weeks, the last few days, the last few hours. Boy, we can tell we got all the way down to test that 104 even. You can tell there the market is definitely open to falling prices here. But, boy, we have a very concerning area here right now as we trade directly into the 107.14 and 105.93. This is going to be a challenge for us today. This anchor chart does tell me, though, that selling short will be the higher percentage trade. I am looking at a downward trend on the anchor chart this morning. We do have the lows of this wedge, though, that you can see I've drawn in this price wedge. That trend line will become a factor here for a profit target later on today, so keep that trend line in mind. I will be trading carefully, though, as we open up this morning. The 107.14, that is considered major support. You can see it has acted that way before. Notice that only over the weekend, only over that low volume holiday weekend, did we see that price drop like that. So it's going to be interesting to see. Remember, we had different types of traders participating on Monday and Friday last week. In the U.S., most of us were distracted and not paying attention Friday and Monday because of the long weekend holiday. This morning we come in and we notice, wow, they were busy in Asia. They were busy in Europe while we weren't paying attention. That opens up the door for falling prices. So I definitely will assume here I'm looking for selling opportunities this morning. The big problem, though, right now is what's this personality going to look like today ahead of that non-farm payrolls on Friday, after that long weekend, right, with news not until after 9 o'clock opening bell. What's this personality going to look like? Is everybody going to be groggy getting back to their desks? or are we gonna jump right into it like nothing happened, right, and get right back to it? From what it feels like right now, we should be patient, wait here a little bit before we start looking for that first entry pattern to the short side. Looking for lower lows, wave pattern short, and again, I'm going to use these areas, 107.14, 105.93, and this trend line, right? Those will be the easiest places for profit targets. And then 104.21, clearly going to be a great spot to be a buyer. So I'll definitely take profit at 104.21 if I can hold on to it that long. It might be a little bit difficult to get to that trend line easily. And then I will definitely be looking for a buying opportunity now coming off of 104.21. That will, of course, be after we see proof from those buyers that they really want to push the price right back up. So short term, I'm being very careful this morning after we come out of the long weekend. Short term, I am selling here this morning. Long term, anything goes in the long term, guys. We're looking at non-farm payroll news on Friday. We had news come out of Asia and London over the overnight session, which all were bullish. And of course, what's going to happen coming into Syria, right? What's going to happen when it comes to Syria? All of those variables are playing into just one of the reasons why I'm going to be very careful as I begin my week. Welcome back to the fall, guys. It's an exciting time of the year to be a trader. This is by far the best time of the year to be a trader. But we got to be patient to wait and see what this day, what this week's going to look like before we go jumping into anything crazy here this morning. Now, that's just one man's opinion. I'm here as a chartist here in Los Angeles, but I'm always interested to see what's happening directly on the trading floor. You know, I've got with me here this morning, I've got my good friend, my partner in crime, Marty Errico. He's got his feet on the ground, the NYMEX exchange, and boy, I'm always excited to hear what he's seeing and hearing out there on the trading floor. Marty, welcome back. Happy fall to you. We made it, my man. We made it to the summertime. Hopefully you made it as well. What are you seeing out there this morning? Thanks for joining us.
Hey, good morning, JJ. Well, it's Tuesday morning that feels like a Monday. We're watching really across the board multiple divergences that are just kind of pointing us just a little actually lower, if you ask me. Right now, what we're seeing is just a series of really kind of evidence that are showing us a little bit of a fade that we can possibly see today. Again, yes, we sit on that previous high day. We have a few variables that could push us lower today, and since Obama, you know, geopolitically, he called off that Syrian missile attack, and he's putting it in the hands of Congress. That means we have to wait another week till they get back. We're waiting till the week of September 9th is when Congress gets back from their summer vacation, from their summer recess. So that's all put on hold now till September 9th, basically. So what are we going to do in the meantime? Well, we're probably going to start to fade this channel. Well, right now, I think we're in this range here. You can see we're up towards the higher end of this wedge. Again, we're at near that previous high day. And right now, we're pretty much within this sideways range. And that's going to be the 105.5 is going to be the lower end of the range. 109.5, right, is going to be the higher end of the range. If we close and settle above 109.5, we're going to be looking to be very bullish. If we settle below 105.5, then we're going to be looking very bearish at the moment. Other than that, we're going to trade sideways within this large range that we have. But right now, I believe we can sell the higher end of this wedge, sell the previous high day, and trade a little bit lower. But again, once we breach that 105.5 level, which is all the way down here, you know, I don't think we're going to breach it today. I think we'll just trade sideways. Again, I'm going to be watching the 10 o'clock news. It's going to be important. But those are some levels that most of the pit traders are looking at on a weekly standpoint, right? Looking at that on a little bit of a longer general time frame. Risk-on sentiment coming back into the market. We can rely on looking at the dollar and using that as our inverted correlation with the crude. And real quickly, just taking a quick look across the board of all of our suspects. We're slightly lower to sideways this morning. Again, yeah, up at previous highs a day. I understand that, but thinking that we're running into some resistance and we can watch this sideways range, you know, sell the highs and buy the lows. Don't get me wrong, we will find some decent buying opportunities, I believe, during the day as we have that extra push in the market due to some of the bigger participants coming back into play. Right, we have about just 15 minutes till the gold pit session opening bell, and it seems like some of our larger participants are back on the trading floor this morning as they are about to open those markets up in about 15 minutes or so. We have gold, precious metal futures products opening, so it seems like some of the larger participants are actually here this morning. Again, as we spoke about earlier, right, we spoke about crude RBOB heating oil at the highs of their ranges is starting to fade off, and so I'm looking at a little bit of a lower to sideways sentiment, right? Brent WTI spread in backwardation by close to $1.50. Brent crude trading a little bit lower. We have some major levels in the Brent. 113.60 really is going to be that line in the sand. If we break below that level, then we're going to fall hard in the Brent, really hard, down to at least like 110, 109. So, you know, we have a potentially large trade in the Brent, again, below the 113.60. But as I mentioned, we will find some decent buying opportunities. We are going to look to sell first and probably buy later, as we have, again, the first trading week of the month coming into play here. We have jet fuel buying, cruise liner buying. We have a lot of variables in play. We have a lot of hedging coming into the market. Today we find the dollar higher, right? A little bit on the net change standpoint on the day. The dollar is higher by about, let's see, close to about 50 points, right? About 50 ticks, 24 points. 25 points on the day, so dollar higher, right? We have all of our other commodity currencies lower, and also for commodity lower, right? We have the Brent touch lower. Brent WTI spread in big backwardation. We have RBOB and heating oil very sideways, slightly lower as well. Volatility has been actually rising just a bit, but I'm sure we will probably stabilize when we open up and probably not rise as much in the volatility. It's the implied volatility. And we also want to talk about here some of the options prices. Now, real quickly, you can see these are that's where we're going. Again, we have some major strike levels trading around that 105.5. Again, very bearish moves coming in at 105.5, but really they straddle this range, so we could trade within this range of really 105.5 right up to 109.5, and it's going to be a little sideways, I'm thinking. So let's see this morning what they do around this one. It's 0710. 107.5, 108 strike level. Let's see if they bring in any money to the upside here. Natural gas right now, we're trading within this wedge, this channel here, right? We're going to be looking for a little bit of some selling opportunities. We have a double top around those 370 evens, really 369 even, right? We're going to look to sell that as we open up this morning. Real quickly, looking at some levels here, right? We have levels here from Friday's trade, right? 108.70 the high, the low 106.45, closing settlement number 106.82, right? Daily pivot 107.82 to $1 above settlement. Resistance 108.71, 109.94, 65, sorry, and 111.48. Support 106.48, almost 106 even, and that 104.16. Again, implied volatility has been rising, right? I got about 28% here. Vol index almost 30, so that's big here, guys. Volatility rising, but again, we probably could stabilize towards the open. Looking at natural gas real quickly here, highs from yesterday, low, right? Resistance and support above and below. You guys can take a look at that. But again, we're looking to sell 369s and 370s. As you can see, that's almost our R3, 371. So we'll be looking to sell those highs, right? And still trade within that channel. So that's about it here for me, guys. Again, I got to get ready here. I'll see you all in just a little bit. Again, that's about it for me. I'm going to throw it back over to JJ as we are getting ready here on a Monday morning. Well, almost. It's kind of feeling like a Monday morning, even though it's a Tuesday. We'll call it a Monday, though.
That's going to keep happening, baby. That's going to keep happening. Yep.
Right?
Boy, it is a Monday. It's a Monday that feels like a Tuesday, right? Is that what it is?
Yeah.
Boy, great to have you back here, Marty, as always. I think we're going to continue to hear a lot of that confusion this morning. I'll tell you, I don't know whether it's the coconut sunblock, the margaritas, or possibly all the different news events that are flying around. We got non-farm payrolls this week. We got news out of Syria, waiting on Congress to come back from summer break. Boy, there's a lot of balls in the air right now, guys. That all screams at us. Just be careful out there as you get your day started. Sounds like Marty and I are both on the same page as far as we can really go either direction right now. I want to definitely repeat what Marty said too about Congress being on summer recess. Boy, Marty, I think you and I are in the wrong business right now. I didn't. It's been a long time since they gave us recess. I wouldn't mind getting some recess every once in a while. Maybe we should have that every day around noontime, huh? But boy, waiting on Congress to come back here from recess. We know that's going to be a little bit of a hurry up and wait regarding Syria. And again, we know that today being the first day back from a long weekend. So trade carefully out there. Be careful as we get back to the action this morning. As always, come out and see us Monday through Friday, 7:30 a.m. Eastern Time, Monday through Friday. We put these charts up on the blog. We record the session each day. And as always, don't forget, if you have any feedback for us or if you'd like to get an invitation to come be part of this broadcast each morning, just shoot me an email. That's jj@schooloftrade.com or marty@tradersaudio. Don't forget to come check me out at School of Trade. We offer a free trial right on the homepage, and check out tradersaudio.com and go listen in to Marty and his partner Jeffrey every morning at 8:50 a.m. Eastern Time, live from the NYMEX. Thank you guys so much for coming back and seeing us here. I'm disappointed the summertime is behind us, but we are excited to have the fall and all the opportunities that come along with it right in front of us. Break out the sweaters. Is it time for the eggnog yet? I don't think so yet. Not quite there yet. Give us about a month or two. We'll be talking about Christmas and holiday season. But we're right around the corner. Have a great trading session out there, guys and gals. We'll catch you back here, same time, same place tomorrow, 7:30 a.m. Eastern Time, Monday through Friday. Adios, amigos. Bye-bye for now.